Matthew Mickey with the daily profile. I'll be doing the wargaming for 11/25 Tuesday. Let's get this party started. All right, sharing my screen. Started on the daily chart. We can see that. Let me make sure my headphones are hooked up. Okay, cool. We can see that based off of Friday and Monday, there's an 81% probability of taking out previous day high. There's a 21% probability taking out previous day low. If we take the opening price, obviously that shifts, right? And then let's go look at, right, that probability, right? So we can see that this is the 81 of the high. We can see that Friday was bullish. Yesterday was bullish. Yesterday closed above the high, giving us the 81%. We can click on here now. Now we can see that, let's say, between the median, which is 50% of the data, and the 70th percentile is between 0.43 and 0.72. So we know that that is realistic targets to shoot for as we go higher, right? We can also see from a weekly perspective that we had this 80% target, which is 1% off of this blue line, right? That was not hit last week. So the variance of it getting hit 2 times in a row is very slim to none. So that also is a case to come up here. All right, coming over to the daily profile. Let me get this set up. 5-minute chart. Right, we can see that we had short true broken, right? We had long, right? We can see that in this case, now we had short. We went short out of New York 1 to 7:30 to 8:30. Right, we can see there's an 81% probability of false versus the 18 versus true, right? So we're going to select false. Coming down, we can see we can expect the low of the day between 9:30 and 10:15 and the high of the day end of day, right? So now that's telling us to find levels to find buying opportunities, right? So we can look right here and we know that out of the 76 days, 30% of the time, or 70% of the time we went here, 50% of the time we went here, and 30% of the time we went here before making that reversal, before retracing into MAE, MFE, right? It's the reversal zone, right? So we're going to be looking around this P12 low to see if we can get down here, make that new low of the day, right? And reverse somewhere between 839 and 764, but more specifically 800 to 838, right? To see if we can plant a new low of the day and then we start reversing, right? So that's the highest probable trade, right? Is that we come down to here and then we reverse, right? We have some other data that we can look for as well for this short false. So let's go look at it, right? Low of the day can go anywhere from 0.5 to 1% off a Globex open. So we can put that under the short false, 0.5 to 0.1 between 9:30 and 10:30. Right, and that's going to lead us lower. So that sinks in with, this is over 20 years worth of data, that sinks in with what the local market is telling us anyway, of where they expect that pivot, right? So we know that if this is the path that it decides to do, which we'll look for the 4-step reversal around 9:30, we can see that we should have a pretty, once we make that reversal between 9:30 and 10:15, we just could be able to start trusting the quarters if we don't make it beforehand. So the green pole has it happening anywhere now to start heading back up. So if we start climbing above this gray box, this 7:30 to 8:30, we know that the market's so strong that it's not going to make a new low of the day, and it's going to just start ripping to the upside. Couple other things that I want to point out, right? Our P12 shows that we're just ranging from 6 to 9:30 around the 6 o'clock opening price, which usually indicates they expect a high day, low day to happen after, right? So the low or the high, the MAE of the 12 hours should happen here, right? After 9:30, right? So that's another reason we look for a sell for this medium MAE, and then to start looking for the 4-step reversal for a reversal, right? Let's put the high of the day data on. right? So we have realistic expectations for the high of the day, right? Coming over here, we can see that the high of the day data can go from 0.1 all the way to 0.4. If we bridge that, we can even push it out to the 0.6. So 1 to 0.4. And we can expect this to be end of day, right? One thing that I noticed is volatility starting to contract finally, right? We're still overspending in Asia and London, but we're doing it less and less and less, right? So we can see that volatility is starting to contract, which means our ranges are getting smaller, right? And when you start seeing that, you know not to trust that 10-day median range, but you trust these session distributions, right? So 9 New York 1 over the last 16 weeks has been 0.60, which would be somewhere around this, right? All at the high, right? Which would say we would look below the P12 low and then suck back into the range. And then we put New York 2, which is the afternoon range, right? Which has been 0.74. We know that this high of the day can sink in, which would give us a grand total of like a 200 handle day or a 1% day, right? Which is very reasonable, especially in a market where volatility is contracting. So we know what we're looking for, right? We know where our high probability zones are. We know what the high probability, the structural statistics are telling us. And if we can't get that 4-step reversal, then we have to expect the true, right? Which I'll let the people in the boot camp do the true. The one thing that we notice about the true is we make the move, we do a DWP style move, and then we range in the afternoon, leading to a more range in market. All right. So with that being said, hopefully this was helpful. Later, Raiders.